Hey guys, you've joined us at Money Control. I'm Manisha Gupta, and joining me on the show right now is Peter McGuire of XM Australia. And we have seen the crude oil prices make all kind of headlines. It's trading at a 3-month lows. We've seen the prices decline 4% in this week. This is after a 10% decline in the month of October. So from a high of $91 a barrel in October, we're trading at $81 in the month of November. So that has been $10 shaved off the prices. Peter, hi, thank you so much for joining us. What is your sense, first of all, on the Israel-Hamas conflict? Because that war premium clearly seems to be going away. And in addition to that, it is about the weak economic data, weak China and US consumption. All of that seems to be weighing onto the crude prices at the same time.
Well, exactly. And good afternoon, Manisha. I think a couple of things further to that, but you've pretty well summed it all up. You've also seen quite a fair bit of volatility across US dollar. And think about what we saw last week, a 6% nearly move to the upside for the S&P 500, which was just extraordinary. A big, solid week. And the Fed coming out and say, no rate rises and all of that. So I think that war premium is certainly dissipated for the Palestinian and naturally the Israeli situation. And there just doesn't seem to be any, I suppose, impetus to push it higher from that geopolitical standpoint. And so what happens is it naturally falls in price. And that's what we've seen, as you have mentioned, a really big washout, and it's been a dramatic washout. So this is the second time this has happened in the last 2 months. So, is it going to be third time lucky? We've just got to wait and see. Hopefully not from a geopolitical stance.
Peter, from talking about $100 a barrel of a probability, now a lot of people are talking about $75 of a probability as well. I mean, that's how quickly the market dynamics are changing.
Absolutely. And I'm not sure how, there's the other side of course, as far as expectations from OPEC's positioning, what they think is going to be demand in 24. The other side, of course, is weak. When you're looking at China and what they experienced from an export side, and they announced their figures yesterday, that was very, very soft from an export, and it's an export-driven economy, as we know. So the global demand for their products has been well and truly, soft. And where we run from here, I'm just sitting here going, well, is we going to see a surprise from OPEC Plus? Do we see further cuts as far as production? I know that they want higher prices, so we've just got to work through this and see if there's any surprises entering the market between now and Christmas, Manisha.
But would you say that OPEC and allies perhaps would be comfortable if the prices hold around 80? Yes, if it goes towards 75 is when you think they would start to work on this again?
Exactly. I believe they will. And another thing that we're going to be mindful of, US did produce nearly at record levels. Well, there was a record level, I believe, in August, around about 13 million barrels. So they're really producing an enormous amount in the States. You've got an election less than a year away now for the United States. Change of governments could quite easily happen. What the temperature or what the temperament's going to be from if you see a sweeping change as far as political parties and where they position themselves with agendas moving forward, electric vehicles, consumption and all of these sort of factors. So, the chart tells a story. It's been certainly very choppy and it's, volatility, Manisha. It keeps on, rearing its head, doesn't it?
Oh, yes. Peter, we're playing a chart right next to you which shows that for the year 2023, we've seen a range of 70 on the lower side to 96 on the higher side for the Brent prices. I mean, would you say that it can be safe to say that for the next year as well, this is perhaps the range that you could see for the prices?
I want to get, a couple of things. I want to see how we roll into Christmas as far as demand. I think there's the geopolitical side, I don't necessarily think is actually completely evaporated. I feel as though that there are still tensions there, Manisha, and we've just got to see how that plays out. And if you were to see a surprise, then that would really change, I think, behaviour as far as the markets are concerned. It's pretty hard to go against what you've seen as far as, the consensus. But I feel as though it'll probably be higher than what it is at the moment into next year, not lower. And I'm looking to possibly see some surprises enter the market.
Clearly that. Peter, before we let you go, this is Diwali time in India and all eyes on gold. I mean, that also has corrected. Good news for Indians because this is the time we start buying in as well. How are you looking at prices going forward from here?
I still believe, Manisha, its best days are ahead of it. Happy Diwali, and of course, it's a wonderful time. And I feel as though, from a standpoint, there is no shortage as far as demand from central banks and, of course, governments. But more importantly, I think the appetite of the consumer globally is really warming to the gold market. And I think I won't be surprised to take its all-time highs out very quickly, certainly early 2024, if not sooner.
So you would advocate buying at these levels?
I think so, because I feel as though what we've got to be very conscious of is the decoupling between gold and the US dollar, Manisha, and it seems to be totally decoupled. And we're only at 2,000 the other day. We're at 1975. It's given up some of that hot air, but I feel as though its best days are certainly ahead of it. And keep an eye on silver as well.
Oh, we will do that, Peter. Thank you so much for joining us. Thank you for wishing us, and happy festivities to you too. So clearly, while crude oil prices could be all volatile, but gold and silver with this correction is definitely a buy.